This video is for anyone preparing to take the state portion of the Alabama Life Insurance Licensing Exam. It covers only what is specific to Alabama. The national side of insurance, how policies work, the basic product types, the general rules that apply everywhere, is covered in separate material, and we are assuming you are studying that elsewhere. What we do here is narrow. We focus on the Alabama laws, the Alabama numbers, and the Alabama rules that the state can and does test you on, the places where Alabama does something a little differently from the country at large. On your actual exam, the life-only version draws 18 of its questions straight from Alabama insurance law, so the material in this video is worth real points. Let us get into it. Every state has a regulator that oversees the business of insurance, and in Alabama, that regulator is the Alabama Department of Insurance. You will hear it called the DOI for short. At the head of it sits the Commissioner of Insurance, and the Commissioner is the figure the exam keeps coming back to. The Commissioner enforces the insurance code, investigates complaints, holds hearings, and writes the regulations that fill in the details the statutes leave open. That authority to make rules comes from the code itself, and it is the source of nearly every Alabama insurance regulation you will study. When a question asks who has the power to adopt regulations, suspend a license, or examine an insurer's books, the answer is the Commissioner. Now, a company cannot simply decide to sell insurance in Alabama. Before it transacts business, an insurer must hold a certificate of authority issued by the department. Think of the certificate of authority as the company's license to operate in the state. A company that holds one is called an authorized or admitted insurer. A company without one is unauthorized or non-admitted. That distinction matters because admitted companies are the ones backed by the state's consumer protections, and we will come back to that idea when we reach the Guaranty Association near the end. Companies are also classified by where they are formed, and the exam likes these three terms. A domestic insurer is one formed under Alabama law. Alabama is its home. A foreign insurer is formed in another state, say Georgia or Tennessee, but authorized to do business here. And an alien insurer is formed in another country. The trick the exam plays is mixing up foreign and alien, so anchor it this way. Foreign means a foreign state. Alien means a foreign nation. A company based in Florida doing business in Alabama is foreign, not alien. Let us recap what to lock in from this section. The regulator is the Alabama Department of Insurance, led by the Commissioner, who holds the rulemaking and enforcement power. A company needs a certificate of authority to be an admitted insurer. Domestic means Alabama formed. Foreign means another state. Alien means another country. Next, we turn to how you, the producer, get licensed in the first place. Studying for your insurance licensing exam? Check out the My Insurance Guide flashcards app, built specifically to help you pass your insurance licensing exam with confidence. Master over 1,000 expertly curated flashcards across every insurance line. Built-in spaced repetition brings back the tough terms right when you need them, and timed practice exams prepare you for the real thing. Click the link below and download today. Now, back to the video. Here is a change that catches a lot of people off guard, and it is exactly the kind of recently shifted rule the exam writers like. Alabama used to require a prelicensing course before you could sit for the exam. It no longer does. As of the 1st of January 2024, the state removed the prelicensing education requirement entirely. So if your study materials mention a mandatory 20-hour prelicensing class as a precondition, set that aside. Alabama does not require it anymore. You can prepare however you like and go straight to the exam. A few baseline qualifications still apply. You must be at least 18 years old. You must complete a fingerprint-based criminal background check, and the timing matters. You arrange the fingerprinting after you pass the state exam, and the recommendation is to do it the day before you apply for your license. And you must not have committed any act that would be grounds to deny, suspend, or revoke a license, things like fraud, forging a signature on an application, or cheating on the licensing exam itself. Once you pass the exam, you apply for the license and pay the required fees. In Alabama, those fees come in pieces. There is an application fee of $30 and a license fee of $50, which together come to $80 for the producer license. When a company appoints you, there is also a notice of appointment fee of $40. Keep that $80 license figure in mind because fee questions are common and the numbers are specific. There is also a special category worth knowing, the temporary producer license. Alabama allows the commissioner to issue a temporary license without an exam in certain situations, most commonly to the surviving spouse or the court-appointed representative of a producer who has died or become disabled, to a designated member or employee of a licensed business entity when that designated person dies or is disabled, or to the designee of a producer who is entering active military service. The purpose is to keep an existing book of business serviced while things get sorted out. The number to remember here is the duration. A temporary license is valid for no more than 6 months. It generally cannot be renewed, with one narrow exception. It may be renewed once if the producer is kept out by a disabling illness or injury. So, the temporary license is a 6-month bridge, not a permanent path. The holder still has to pass the exam to earn a regular license. Let us recap the numbers. No prelicensing course required. Minimum age 18. The license costs $80 all in, $30 for the application, $50 for the license. A temporary license lasts no more than 6 months. Now that you have the license, let us talk about keeping it. Your Alabama producer license runs on a 2-year cycle, and the cycle is tied to something personal, your birthday. The license expires on the last day of your birth month every 2 years, and whether you renew in even or odd years depends on the year you were born. If you were born in an even-numbered year, you renew in even years. If you were born in an odd-numbered year, you renew in odd years. It is a tidy system once you see it, and the exam may test the logic, so hold on to it. Birth month sets the date. Birth year sets the cycle. If you miss your renewal, there is a short cushion. Alabama gives you a grace period of 30 days after expiration to renew late, but it costs you. There is a $50 late fee on top of the regular renewal fee. Let those 30 days lapse without renewing, and the license expires. And once that happens, your company appointments are canceled along with it. Now, to the continuing education, which is the heart of this section. Alabama requires a producer to complete 24 hours of continuing education, you will hear it called CE, every 2-year license term. Of those 24 hours, 3 must be in ethics. Say that back to yourself. 24 hours total, 3 of them ethics. That ratio is a classic exam target. A common trap is to swap the ethics number, so if you see an answer choice claiming 2 hours of ethics for a producer, be suspicious. 2 ethics hours is the figure for service representatives on the smaller 12-hour requirement, not for a full producer. A handful of rules shape how those hours work. You cannot take the same course twice in the same renewal period and get credit for it both times. And Alabama does not let you carry extra hours forward. If you complete more than 24, the surplus is simply lost when the period ends, so there is no banking ahead. On top of the general 24 hours, Alabama layers in special training tied to particular products, and these one-time and ongoing requirements show up on the exam. If you want to sell long-term care insurance, LTC, you must first complete an 8-hour initial long-term care training course, and after that, an ongoing 4-hour course in each 2-year cycle. If you want to sell annuities, you must complete a one-time 4-hour annuity best interest training course before you make a single annuity recommendation. And if you sell federal flood policies, there is a one-time 3-hour flood course. So the pattern to memorize is 8 then 4 for long-term care, a one-time 4 for annuities, and a one-time 3 for flood. There are exemptions from the basic CE requirement, and a couple are worth knowing. A newly licensed producer who has held the license for less than 12 months at the time of the first renewal is exempt from CE for that first period, though they must claim the exemption when they renew. And a non-resident producer who has satisfied the continuing education requirement in their home state is treated as compliant in Alabama because Alabama leans on the home state to do the policing. Let us recap the must-know figures. 2-year term ending, the last day of your birth month, 24 hours of continuing education, 3 in ethics, a 30-day late grace period with a $50 fee, long-term care training of 8 hours upfront and 4 ongoing, a one-time 4-hour annuity course before selling annuities. Lock those in. Next, we look at the relationship between you and the companies you represent. You may hold a producer license and still not be able to write business for a particular company until that company appoints you. An appointment is the formal authorization from an insurer that lets you act as its agent. The mechanics are something the exam tests, so let us walk through them by ear. When an insurer wants to appoint you, it files a notice of appointment with the commissioner. Alabama expects that filing promptly, within 15 days from the date your agency contract is executed or the date you submit your first application to the company, whichever comes first. Once the commissioner receives that notice, the commissioner has 30 days to verify that you are eligible for the appointment. If you turn out to be ineligible, the commissioner must notify the insurer of that within 5 days of making the determination. So, the rhythm is: the company files within 15 days, the commissioner verifies within 30 days, and flags any problem within 5. Termination runs on its own clock. An insurer may end a producer's appointment at any time, subject to whatever contract rights exist between them. But when it does, it has to tell the commissioner. The insurer must notify the commissioner within 30 days following the effective date of the termination, using the format the commissioner prescribes. And there is a second step aimed at protecting you. Within 15 days after notifying the commissioner, the insurer must mail a copy of that termination notice to you, the producer, so you are not left in the dark about what was reported. The exam likes to test whether you know that the company's duty to report a termination runs to the commissioner, and that it is 30 days. One more protection rides along with this. When an insurer reports the reasons for a termination in good faith, the law gives it immunity. That information is privileged and generally cannot be used as the basis of a lawsuit against the insurer. The point of that immunity is to encourage honest reporting, so that bad actors actually get flagged rather than quietly passed along. So recap the timeline. A company files your appointment within 15 days. The commissioner verifies within 30 days. A company reports your termination to the commissioner within 30 days, then sends you a copy within 15 days. Next, we move from the business relationship to the contract itself, beginning with who is even allowed to be insured. Before a life insurance contract can stand, 2 foundational things generally have to be true in Alabama. There must be insurable interest, and the person being insured must consent. Let us take them in turn, because both carry Alabama-specific wrinkles the exam can probe. Insurable interest in personal insurance means a genuine stake in the continued life or health of the insured. Alabama frames it as a reasonable expectation of benefit from that person's continued life. And that expectation can come from a close family relationship of blood or law, where natural affection supplies the interest, or from an economic tie, like a business partner or a creditor. The critical rule is about timing. For life insurance, the insurable interest only has to exist at the moment the policy is issued. It does not have to continue for the life of the policy. That is why an ex-spouse can remain the beneficiary of a policy bought during the marriage even after a divorce. The interest existed when the contract was made, and that is what the law requires. Alabama makes the consequence concrete. A personal insurance contract taken out on another person is void unless the benefits are payable to the insured's personal representative, or to someone who held an insurable interest at the time the contract was made. Picture how the exam might test this. A man takes out a life policy on a business partner, naming himself as beneficiary because the partner's death would cost the business real money. Years later, the partnership dissolves, and the partner dies still later. Was there insurable interest? Yes, and the test is whether it existed when the policy was issued, which it did. The dissolution afterward does not undo the contract. Now flip it. A stranger with no economic or family tie tries to buy a policy on someone simply hoping to profit from that person's death. No insurable interest exists at issue, so the contract is void from the start. Consent is the second pillar. As a rule, you cannot insure another individual's life unless that individual consents to it. Alabama spells out the exceptions. One spouse may take out insurance on the other spouse. A person who has an insurable interest in a minor, or on whom a minor depends for support, may insure that minor. And a family policy may be issued covering 2 or more family members on an application signed by a parent, a step-parent, or a spouse. Outside of those situations, the insured's own consent is required. That brings us to minors, which Alabama treats with a specific age, and specific ages are gold on an exam. Ordinarily, a minor lacks the legal capacity to enter a binding contract. But Alabama makes an exception for insurance. A minor who is at least 15 years old, measured by the nearest birthday, may contract for insurance on their own life, body, or health, or for an annuity, or on the life of another person in whom the minor has an insurable interest. A minor who does this is treated as fully competent for that contract and cannot later back out simply on the ground of being a minor. There is a companion rule about receiving money. A minor must reach 18 before they can give the insurer a valid release or discharge for benefits paid out. So tie those 2 ages together: 15 to buy and own the coverage, 18 to give a binding receipt for the proceeds. And when a policy is taken out by or for a minor, the benefits must be payable to the minor's estate, or a person with an insurable interest in the minor's life. Let us recap. Insurable interest must exist when the life policy is issued, not for its whole life. You generally need the insured's consent, with exceptions for a spouse, a minor, and family policies. A minor of 15 may contract for their own coverage. A minor must be 18 to give a valid discharge for payment. Now let us look at the provisions that must appear inside the policy itself. Alabama law dictates that certain provisions appear in every individual life insurance policy. Several of them carry numbers that are favorites on the state exam, so we will go through them one at a time, state the figure, and repeat it. Start with the grace period. If a premium is not paid on its due date, the policy does not lapse immediately. The insured gets extra time. In Alabama, the required grace period is 30 days. During those 30 days, the policy stays in full force, and if the insured dies within the grace period, the death benefit is still paid, with any unpaid premium simply deducted from the proceeds. We will say that number again, 30 days. There is one variation to keep straight. For a flexible premium universal life policy, the grace period is longer, 60 days. So the default life grace period is 30 days, and flexible premium universal life stretches it to 60. Here is a scenario, because the exam loves to build a question around the grace period. A premium is due on the 10th of the month, and the insured does not pay it. 20 days later, still inside the 30-day grace period, the insured dies. Is the death benefit payable? Yes. The policy was still in full force during the grace period, so the company pays the claim and simply subtracts the one premium that was owed from the proceeds. The lesson the exam is testing is that a death during the grace period is a covered death, not a lapse. Next, reinstatement. Suppose a policy does lapse for non-payment past the grace period. Alabama gives the policy owner a generous window to bring it back to life. The policy can be reinstated at any time within 3 years after the date of premium default, as long as the policy has not been surrendered for cash. To reinstate, the insured has to do 3 things: provide evidence of insurability, satisfactory to the insurer, pay all the overdue premiums, and pay any outstanding loan with interest. That 3-year reinstatement window is a strong exam target. A trap to watch for is confusing reinstatement with the grace period. Grace is measured in days, reinstatement in years. Now the incontestable clause, which is one of the most heavily tested provisions anywhere. After a life policy has been in force during the insured's lifetime for 2 years from its date of issue, the insurer can no longer contest it, except for non-payment of premium. That means after 2 years, the company cannot void the policy even if it later discovers a misrepresentation on the application. 2 years, that is the Alabama figure, and it matches the common standard, but you should still be ready to confirm it on the exam. And here is a related rule worth holding. If a lapsed policy is reinstated, the contestable period can begin again as to statements made in the reinstatement application for the same length of time and on the same terms as the original. The suicide provision lines up with that same 2-year mark. If the insured dies by suicide within 2 years from the date the policy is issued, the insurer is not obligated to pay the full death benefit. Typically, it returns the premiums paid instead. After 2 years, suicide is covered like any other cause of death. So both the incontestable period and the suicide exclusion run 2 years in Alabama. The exam will sometimes give one of them a different number to see if you will catch it. Then there is the free look, your client's right to examine a newly delivered policy and return it for a full refund if they change their mind. In Alabama, the standard free look period for an ordinary life policy is 10 days from delivery. During that window, the buyer can hand the policy back and get every dollar of premium returned, no questions asked. Hold that 10-day figure, but note an important exception we will develop in a moment. When the new policy is replacing existing coverage, the return window is longer. Let us recap these provisions because this is the densest set of numbers in the whole video. Grace period, 30 days or 60 days for flexible premium universal life. Reinstatement, within 3 years of default. Incontestability, 2 years. Suicide exclusion, 2 years. Free look, 10 days. Mix those up, and you will lose points, so drill them until the unit attaches automatically to each rule. Next, what happens when a claim comes due? When a life insurance policy becomes a claim because the insured has died, Alabama law governs how quickly the company must respond and what happens if it drags its feet. The basic rule is that settlement is made upon the insurer's receipt of due proof of death, and, if the company chooses to require it, surrender of the policy and proof that the claimant is the right person to be paid. The company is allowed to set a period within which it will settle, but Alabama caps how long that period can be. If a policy specifies a time before which settlement must be made, that period cannot exceed 2 months from the receipt of the proofs. So the outer boundary built into the contract is 2 months. There is a separate and sharper number around interest. If the insurer fails to pay a death claim within 30 days after it receives satisfactory proof of death and proof of the claimant's interest, then interest starts to run on the money owed. The interest is calculated from the date the insurer received the proof of death, all the way until the date it actually pays, at the rate the company pays on death proceeds left on deposit. The takeaway for the exam is the 30-day mark. Pay within 30 days and no interest is owed. Go past 30 days and interest accrues back to the date proof was received. One clarification, this interest rule applies to life insurance death claims, not to annuity contracts, which the statute specifically carves out. So, recap, settlement follows proof of death. A stated settlement period cannot exceed 2 months. And if the claim is unpaid past 30 days from proof, interest runs from the date of proof. Now we turn to one of the most regulated activities a life producer engages in, replacing existing coverage. Replacement is the act of selling a new life insurance policy or annuity in a way that causes an existing policy or annuity to be ended, reduced, or borrowed against to fund the new one. Alabama regulates replacement tightly because a replacement that is not in the client's interest can cost them dearly: new acquisition costs, fresh surrender charges, and a brand new contestable and suicide period. Your job as a producer carries specific duties here, and the exam tests the mechanics. It starts on the application. You must ask the applicant and have them sign a statement about whether they already own any life insurance or annuities. If the answer is no, your replacement duties are finished for that sale. If the answer is yes, the obligations kick in. You must present and read to the applicant a notice regarding replacement, the state's important notice form, no later than at the time you take the application, and both you and the applicant sign it, with a copy left in the applicant's hands. If the notice is handled electronically, the insurer has to mail the applicant a copy within 3 business days. The companies have duties too. The replacing insurer, the one issuing the new policy, must notify any existing insurer that may be affected by the replacement within 5 business days of receiving an application that indicates a replacement. That gives the existing company a chance to reach out to its policyholder and make the case for keeping the old coverage. Now, the number that matters most to your client, and the one most likely to be tested, the right to return. On a replacement, the new policy comes with an extended free look. The owner has the right to return the policy or contract within 30 days of delivery and receive an unconditional full refund of all premiums paid. Notice the contrast we set up earlier. An ordinary life purchase carries a 10-day free look, but when the sale is a replacement, that window stretches to 30 days. If the exam asks for the return period on a replacement, the answer is 30 days. Alabama also puts teeth behind these rules. Certain conduct around replacement is flatly prohibited. For example, advising an applicant to answer no to the replacement question in order to keep the existing insurer from being notified, or coaching a client to write to the company in a way that hides the identity of the replacing producer. Violations can bring real penalties: suspension or revocation of a license, fines, forfeiture of the commission earned on the transaction, and, where the violation was material to the sale, restitution to the client with interest at 6%. Let us recap. On every application, you ask about existing coverage. If there is a replacement, you read and deliver the replacement notice at the time of application. The replacing insurer notifies the existing insurer within 5 business days, and the client gets a 30-day right to return on a replacement, compared with 10 days on an ordinary purchase. Next, the special rules that apply when the product is an annuity. Annuities get their own layer of regulation in Alabama, built around a single governing idea. When you recommend an annuity, you must act in the best interest of the consumer. Alabama adopted this best interest standard, replacing the older and weaker suitability-only approach, and it is the framework the exam now reflects. Acting in the consumer's best interest is not a vague slogan. The rule breaks it into concrete obligations. There is a care obligation. You must have a reasonable basis to believe the annuity effectively addresses the consumer's financial situation, insurance needs, and objectives, based on the information you gather about them. There is a disclosure obligation. You must tell the consumer, in writing, about your role, the products you can offer, how you are paid, and any material conflicts. There is a conflict of interest obligation. You cannot place your own or the insurer's financial interest ahead of the consumer's. And there is a documentation obligation. You must record the basis for your recommendation. The unifying principle the exam wants you to recognize is that the consumer's interest comes first, and the producer's compensation cannot drive the recommendation. Tied to this is a training requirement we flagged earlier, and it is worth restating in this context because it is a precondition to doing the business at all. Before you may sell or even solicit an annuity in Alabama, you must complete a one-time annuity training course of at least 4 hours, approved by the department and built around these best interest rules. No training, no annuity sales. A producer who completed an older annuity course before the best interest rules took effect had to top it up to come into compliance. So pair the concept with the number, best interest standard, backed by a one-time 4-hour training course. Recap this section. When you recommend an annuity, the consumer's best interest controls, expressed through care, disclosure, conflict of interest, and documentation obligations. And you must finish a one-time 4-hour annuity training course before you sell. Now we turn to the broader rules of conduct that govern how you market and sell. Alabama, like every state, prohibits a list of unfair and deceptive practices in the business of insurance, and the exam expects you to recognize them by name. Misrepresentation is making a false or misleading statement about a policy's terms or benefits. Twisting is using misrepresentation to persuade someone to drop one policy and replace it with another to their disadvantage. A cousin of churning, which is doing the same thing but replacing within the same company. Rebating is offering a client something of value not stated in the policy, a share of your commission, a gift, a special favor, to induce the sale. Alabama prohibits it as a form of unfair inducement and unfair discrimination between similar buyers. Defamation is spreading false statements that harm an insurer's reputation. Coercion, boycott, and intimidation involve using improper pressure to force an insurance transaction. And unfair discrimination is treating people in the same risk class differently in rates or terms. Running underneath all of these is the duty to deal honestly, provide accurate information, never falsify an application, and never sign a client's name. Many of the grounds for losing a license trace directly back to these practices. Now, to a piece of Alabama law that is genuinely distinctive and frequently overlooked, the Domestic Abuse Insurance Protection Act. Its purpose is to make sure insurance is never used as a weapon against a victim of domestic abuse, and it places firm limits on what an insurer or producer may do. An insurer may not deny, refuse to issue, cancel, refuse to renew, restrict, or exclude coverage, and may not add a premium surcharge based on the fact that a person is, or has been, a subject of abuse. It also may not deny a claim simply because the loss is connected to the insured's status as an abuse victim. And there is a confidentiality command at the core of the Act. When an insurer has information indicating that someone is a subject of abuse, it generally may not disclose that abuse-related information, except in narrow, listed circumstances, such as at the person's own written direction, or when ordered by a court or the commissioner. The Act is careful, though, not to strip insurers of legitimate underwriting tools. A life insurer may still decline to issue a policy where the applicant would be the beneficiary but lacks an insurable interest in the person to be insured, or where that applicant is known from medical, police, or court records to have committed abuse against the proposed insured, or where the subject of abuse objects to a policy that would benefit the abuser. So the rule is not that abuse status can never matter. It is that abuse status cannot be used to punish or expose the victim. That distinction is exactly the sort of thing the exam likes to probe. Let us recap. Know the prohibited practices by name: misrepresentation, twisting, churning, rebating, defamation, coercion, unfair discrimination. And understand the Domestic Abuse Insurance Protection Act. An insurer cannot use a person's abuse status to deny, cancel, or surcharge coverage, and abuse-related information is confidential. Next, the safety net that stands behind every Alabama policyholder. Insurance companies are strong, but they are not immune to failure, and Alabama maintains a safety net for the rare case when a licensed insurer becomes insolvent. It is called the Alabama Life and Disability Insurance Guaranty Association, and you will see it abbreviated as ALDIGA. Every insurer admitted to write life, health, or annuity business in Alabama must belong to it, and when a member company fails, the association steps in to protect that company's Alabama policyholders up to limits set by law. Those dollar limits are heavily tested, so let us state them clearly. For life insurance, the association covers up to $300,000 in death benefits for any one insured life. For the cash surrender value of life insurance, the limit is $100,000 per insured life. For annuities, the association protects up to $250,000 in the present value of annuity benefits, including cash surrender values per contract owner. Let us repeat the three that matter most for the life exam: $300,000 in life death benefits, $100,000 in life cash value, and $250,000 for annuities. A common trap is to assign the annuity the same $100,000 figure as life cash value. They are different, so keep the annuity number at $250,000. A few boundaries round out the picture. The protection applies only to policies from companies that were licensed in Alabama. Coverage from an unlicensed insurer is not backed by the association. The portion of a variable contract whose value is not guaranteed by the insurer, the part that floats with the investment markets, is not covered, because the policyholder, not the company, carries that risk. And there is an important marketing rule attached. Producers are generally prohibited from using the existence of the Guaranty Association as a selling point, because it should never become a sales inducement. The association exists to protect consumers, not to advertise a company's products. Recap the limits. Life-death benefit, $300,000. Life cash surrender, $100,000. Annuity present value, $250,000. And remember, you may not use the association in a sales pitch. Finally, let us cover what test day itself looks like. We will close with the nuts and bolts of the Alabama Life exam, because knowing the format removes a layer of anxiety, and these details occasionally surface as questions in their own right. The Alabama exams are administered through the state's testing vendor at locations around the state, and your exam certificate, once you pass, is valid for 1 year from the date you complete it, so you have a year to get your license issued. For the life-only license, the exam contains 125 questions. You are given 150 minutes to complete it. To pass, you need 87 correct answers, which works out to 70%. Those questions are split across 3 areas: a general insurance section, a life insurance section, and the Alabama insurance law section. And it is that Alabama law section, 18 questions on the life exam, that everything in this video has been preparing you for. The questions are multiple choice, and your result is graded immediately when you submit. On the money side, the examination fee for the life-only producer exam is $50, and remember, the exam fees are non-refundable. After you pass, the license application fees are the $30 application and $50 license we covered earlier, for $80 total. Treat all of these fee figures as the ones most likely to have drifted by the time you sit, and confirm the current amounts when you register. Let us recap test day. 125 questions, 150 minutes, 87 to pass at 70%, with 18 of those questions drawn from Alabama law. The exam fee is $50, and your passing certificate is good for 1 year. That is the Alabama-specific material for the life exam, and you have now walked through every piece of it. Before you go, let us sweep up the numbers that matter most, the ones worth committing to memory tonight. The grace period is 30 days and 60 for flexible premium universal life. Reinstatement runs 3 years. Incontestability and the suicide exclusion are each 2 years. The ordinary free look is 10 days, and a replacement gives 30 days to return. Death claims draw interest if unpaid past 30 days. Continuing education is 24 hours every 2 years, 3 of them ethics. A minor of 15 may own coverage, 18 to give a valid discharge. And the Guaranty Association covers $300,000 in life-death benefits, $100,000 in cash value, and $250,000 for annuities. If you know those cold, along with the rules behind them, you are in strong shape for the Alabama portion of your exam. You have put in the work to get here, and it shows. Take a breath, trust your preparation, and walk in with confidence. You have got this. If this video helped you study, please give it a like and subscribe so others preparing for their Alabama exam can find it too. Good luck on test day.